So the homework that you really should be doing is the property itself. Now, everyone looks at this and they go, oh, I've got, I could buy this $2,000 tax lien for this $800,000 property. This is great. They buy it. They're like, oh, I got it at a 16% interest rate. I'm crushing it. Everything, it's all going well. And then they don't know the ugly truth that, hey, that property might be totally burnt to the ground. If you've never looked at it, it might be burnt to the ground, or it could be something where it's going to be more of a headache for you once you get the property than what it's worth. And that's, unfortunately,
Hi, everybody. Jose Luis Morales here. Welcome back to another episode of the Morales Group Show. Today, we have a very special guest. The name is Shawn Malkou. He is a mortgage professional, works for X2 Mortgages. And today, he is going to be going over tax lien investing for beginners. The reason we are covering this topic is I noticed that there was a tax lien list in Ventura County, and I saw some of the properties that were on there, and I saw the prices. I'm like, how does this work? Why haven't I ever invested in tax liens? And how does somebody take advantage of them? So today, Shawn is going to be going over how to find the list. He's going to be going over what type of due diligence to do, meaning how to figure out like which tax liens are better than others, the different positions for tax liens, how to make interest, and then if you have to foreclose on the tax lien as well too. He's going to be covering all that. So this is an episode that you want to watch until the end. Welcome to the show, Shawn. How are you?
I'm doing well. Thanks for having me on. I'm excited to talk about this.
So what I was telling Shawn off camera is that normally in a lot of the topics, I've read a book on it, or I have a lot of information, or I've done it myself. This is like one of those topics where I don't know very much about. So I'm really just going to rely on Shawn to kind of guide me. And some of the questions may be very elementary, but the goal is to maybe help some elementary people as well too, kind of get familiar with this. So for our viewers that don't know who you are, who is Shawn Malkou? And then how did you get involved in tax lien investing?
Yeah, so I basically, it's funny. I started way back in the day, like when I was in high school and college. I was actually just a YouTube content creator. I was making gaming content. And then I somehow made my way into the real estate world, got my mortgage license, and started doing mortgages. And I learned about tax liens from someone else in my office at the time when I worked for a different company. And they said, we had a tax lien we were paying off through a mortgage transaction. And I was like, hey, I'm curious. How does it work? What is a tax lien? How does this happen? And then he explained it to me and he said, you should go talk to this guy. He's made millions off tax liens, off buying tax liens. And I learned a little bit from him, but I didn't know very much. And I basically just stuck to doing mortgages with occasional tax liens on the side. And then really scaled my mortgage career into kind of doing my own thing with my own company. But then I've always, every year when the tax lien auction comes up, I'm always bidding. I'm always buying more because the returns are very safe, in my opinion, and very good, very lucrative, very good. So a little bit kind of how I got started, at least in the real estate world.
I love it. So let's jump right into it. So if somebody wanted to invest in tax liens, like where do they find the list? Is every tax lien county the same? And then once you find the list, like, what are you looking for? Like I saw a list for Ventura County and there's like different numbers, like 50,000, 40,000, 30,000. There's some properties that are land. There's some properties that are commercial. There's like a McDonald's on there with a tax lien. And I was like, a McDonald's? Like, it's crazy. How do I find it? And how do I figure out which ones are the good ones?
Yeah, so that's the cool thing and this thing I like about real estate is so much stuff is public knowledge, some public info that you can, if you know where to look, you can find all this stuff. Now every county is different. So I made a YouTube video, that's been really popular about tax liens because there's not a lot of info out there because it's so different by county. And the ones that do know how to do tax liens, they don't want to share their strategies. They don't want to give any info because now that's their competitors in their county. There's so many tax liens out there that whatever, it is what it is. And there's a lot of big institutions who get into it. So those are your real competition, not other smaller investors. But generally speaking, every county is different. A lot of counties use the same exact, web portal and same exact system for doing their auctions, and they're all online and they're typically once a year. Every single county is going to be completely different. Some are going to have twice a year. Some are going to have, just one a year. I think most common is one a year. And typically when you do one tax lien with one county, you get added to the email list to start getting all of these counties when their tax liens are. And so you can invest in, tax liens in different counties in different areas. I stick to like 3 different counties that I know really well. They're in my market. And we'll get into that more when we talk about kind of strategy stuff. But the best way is to just literally Google your county or whatever county you want to invest in and, search for your tax lien auction. And you'll get in public, the public websites will tell you all the details, how to get signed up. You can invest as an individual or as an entity, as an LLC. There is some work you have to do up front, though. So I tell everyone, if you want to do tax lien investing, if your auction is February 1st, you need a plan to do it, November, December, because you need to get set up and registered. And then most of these websites and most of these portals will go offline for 30 days or 45 days leading up to the auction. So you can do it once it's open, but it's way easier to get ahead of it and do it all kind of up front. So the best thing, Google and find your county's tax lien details and get registered to participate in the next one.
In our market, I think it's a place called bidforassets.com, and it hosts a lot of the different counties. At least that's what I've seen in our area. And I think, in my opinion, or I think what I saw is that you have to register. I think you have to put a certain deposit. What are some of the other things that these online tax auction companies ask for? Or what's common?
The biggest thing is, they want a deposit down for what you think you're going to be bidding on for 10%. So, for example, let's say you're going to buy $1,000 worth of tax liens. You need to have a $100 deposit in your account before the auction starts. Now, whether you use that money or not, it doesn't matter. You'll get it refunded if you don't use that amount, but that's what they like to see is 10% of whatever you plan on bidding. Got it.
Now, so in my list, there is maybe 40, 50 properties, the one that I came up with. How do I, and like I said, it was a wide variety of land. There was a wide variety of commercial, residential. How do I determine which ones are good ones, which ones I want to be involved in, and which ones I should stay away from?
So there's a ton of strategies with it. And this is where everyone's got their own buy box, their own niche, everything they kind of focus on. Now, most of them you can sort by what the property is zoned for, what the classification is. So you could be searching for commercial retail, maybe, commercial warehouse. You could be looking for land. You could be looking, pretty much any type of classification, you can narrow it down. And you can get an idea of, what you want to stay in. Now, I personally like to stay in 2 categories. And it's really the stuff that I like to just buy real estate in, because at the end of the day, you have to think, when I buy this tax lien, I'm not buying the property. I'm buying just the tax, the past due taxes on it. But if the worst case, I have to take this property over. So if I'm buying storage facility tax liens and I know nothing about running a storage facility or rebuilding one, that's not a good investment for me, because if I do get stuck with that property, I'm going to have to figure all that out, and it's going to cost me a lot of money and time. So you want to stick to the properties you know really well. To me, I know land and I know residential really well. So I like to stick in your, single families or small multifamily, like 2 to 4 units. I like to stick in that world, and I like to stick in the land world if I know it's in an area where, hey, a ground up construction on this piece of land would be a really good opportunity. Again, it's totally up to whatever your strategy is. I have friends who stick solely to office buildings. That's what they do. They're commercial real estate brokers, and they buy, and those are big ticket tax liens. Those are $40K, $50K a year, and you have to be willing to go, okay, I'm gonna buy this tax lien. Yeah, we get a nice return if they end up paying it off, but if not, I got to buy 3 years worth of it and foreclose on it, and then I have to be able to redevelop the property and either sell it or lease it. So I would say if you're investing in tax liens, start small and start with what you can develop and find success in if you were to acquire the property.
Got it. So you said a couple things on there that I led to questions. So one of them, you said you have to buy for 3 consecutive years. One question I would have, what does the bidding process look like? Let's say they owe $50,000. Does that mean that tax lien can get bid up to $60, $70, $80, $90, $100,000? And why would that happen?
Yeah, good question. So that was the hardest thing for my head to wrap around when I got into this in 2018. A normal auction is exactly what you just said. Hey, here's the starting bid, 50 grand. Okay, I'm going to bid 55. That's not how tax liens work. Tax liens, and I'll give a rough breakdown of a tax lien. Let's say you have a property, it's worth $1 million, and the taxes on it are, I don't know, $10,000 a year. When that owner of that property does not pay their taxes, that $10,000 that they were supposed to pay, the county goes, well, we didn't get $10,000 and we don't want to wait for this homeowner or this property owner to give us our money. So instead, we're going to just sell it to an investor. We're going to get our taxes. We're going to get our money. And that investor now holds that note or that lien on the property. And it's at a specific interest rate. So what you're bidding is the interest rate. All of them start at 16% across the country. They start at 16%. And you can bid on a bunch of stuff at 16%, and you might win stuff at 16 on just properties people don't want. But more than likely, you're going to get bid down a little bit. And some investors are going to say 16% on this property is not worth it to me. It's not worth it in general. And some of them might say, I take this property at 5%. Like I just want to break even on my money or maybe have it at inflation. Some people will bid down to 3% because they're playing the long-term game of, well, I'll keep paying these if I can foreclose on this property and take it. So really when you're bidding at interest rates and you don't know what your competitors are bidding at. So you might look at a property and go, yeah, I'd really love to get 14% on this, but I really want the property. So I'm going to bid 10%. And now you're a lot more aggressive, but you don't see real time what your competitors are bidding. So someone might have bid, you might be the only person who bid on that. And you talked yourself down to 10%. So it's really challenging. And that's why I have a very detailed strategy on what my break even points are and what's the minimum I'll invest on a property interest rate wise. But that's part of the fun with it is you don't know what you're bidding against. And then when you win, right, sometimes you're like, wow, I can't believe I didn't win this one. I bid super low, or I can't believe I won this one because I bid super high. So that's a little bit how the bidding process works.
That's crazy. So it's almost like a blind auction without anybody knowing. Well, the interesting part to me is like the price is not what's getting bid up, because I was thinking if it was the price that was getting bid up, like let's say they owe a tax lien for 50 and you're paying 70. I'm like, why would you pay 70 for a tax lien of 50? The interest rate is really what you're bidding on, which that makes a lot of sense now. And it's all like how much are you willing to take? Now, why did you say that it was a safe way of investing? Like normally, like let's say I invest in a second trust deed or a third trust deed or a fourth trust deed, there's some risk associated with that. How are tax liens different if you invest in a tax lien versus like a second trust mortgage deed or a third trust mortgage deed?
So I like to look at it, there's two things certain in life, right? Death and taxes. So when I'm on the side of the government or the tax lien side, now you're not taking precedence as if it was an IRS lien or something like that. I mean, if I've got a tax lien and there's an IRS lien, this guy's getting paid first. Obviously, it's the government. But you got, a lien based on the taxes of the property. Now, the reason I think it's a safe bet is because, taxes have to happen every year. It's something that will never get wiped away. It's something that, we all love and hate it, mostly hate it. But to me, it's secured by real estate. So it's essentially having a loan on the property, but it's for a much smaller amount. So, if you look at a traditional property, let's say, okay, I'm going to invest $250,000 in a second lien position or something like that on this property. Maybe values drop a ton and you might only get 150 out of that, 200 out of that. Well, taxes are so small compared to what the value of the property is. So to me, the risk is very low because your actual lien amount on what the value of the property should be extremely low. Now, yes, there's still going to be mortgages. There's still going to be other things that potentially are on the property. But most of the time, a property owner that doesn't pay their taxes, most of the time, it means they don't have a mortgage on the property. Because if they had a mortgage on the property, and not everyone, but most commonly, they've got their taxes and insurance escrowed. And so when you're looking at these tax liens and you're thinking, okay, well, maybe this property is worth 200, 300, maybe $1 million, whatever it is, there's a good chance they don't owe anything on it. Now, there might be other liens on the title. You don't know about that. But in terms of a mortgage, you should be one of the only lien holders on the title.
Got it. Now, what happens, like, let's say I win the auction today and this is year one of the bidding. What happens if next year I get outbidded by somebody else, or if, like, meaning for the same property, or if I bought the first year and I won that year, does that guarantee that I'll get the second and the third year if I want those tax options? Do I get first right at that? And why is a 3-year important? Like, meaning you said that if they go after 3 years, then at that point you can foreclose on them. Like, how does that all play out?
Great question. So this is the stuff that I had to learn just by doing, because there are info that tries to explain it online, and you can call your county and they're super helpful. They'll walk you through it. They want you to bid on these tax liens.
Oh yeah.
But what I learned is you do get first dib. So when your tax lien is up for that subsequent year, you get first dib at it. So, hey, do I want to, spend 10 grand again and buy the taxes for this property again? Yes, I do. Okay, I get first dibs on it, and this will vary by county, but most of the time it's at the same rate you bought the first year at. Sometimes though, you can actually get it at 16%. You can get it at the max. So that's why it pays to get the tax lien. And then, maybe you get it for 4%, but next year you get it for 16, and the next year you get it for 16. So yes, you do get first dib at it. Now, let's say you don't want it. Let's say you say, I don't really want this property anymore. I want my money back, but I don't really want to continue to pay the taxes on it to eventually, get it. It then goes to everyone else to bid on, and everyone else bidding on knows that they are a subsequent tax lien. They are not the original tax lien. And so when they're the subsequent, they technically, they know that, hey, the guy in front of me has to get paid first. That guy, if anything, anything happens to the property, that guy gets paid first. I get paid second. And then in terms of who gets the right to foreclose is going to vary by county as well. So at that point, sometimes it's the guy who bought it first. Sometimes it's the guy who is the most recent lien holder. And I'd say most counties are the most recent lien holder. So that's the trade-off that you get is, hey, I'm buying a tax lien where someone else already bought a year prior to me. So they're going to get paid out first, but I know that they're already 2 years, 3 years in to this process, and maybe I'm going to be able to foreclose quicker, right? So there's different strategies with all that as well. Now, the 3-year rule is most counties, again, this is always going to vary slightly, but most counties will require that you have, or the homeowner has failed to pay their taxes 3 years, 3 years in a row. And so when you've done it for 3 years, or you have a property that hasn't had taxes paid for 3 years, the county has then essentially deemed that, hey, this homeowner is either completely left this property to go, or they're just in an unwilling or an unfit situation to pay their taxes, and we don't want them owning the property anymore. We're tired of auctioning off their taxes. So then they allow you to start the foreclosure process, which will vary by state and by county. But generally speaking, most foreclosure processes will take 60 to 120 days before you actually get the property in your name.
Have you ever
that's why the 3 years is super popular.
Have you ever been through the foreclosure process on a tax lien? Like, have you ever foreclosed on a property on a tax lien? And what was that process like in your area?
Yeah. So I have. I didn't get it done, and I was super excited because it was a great piece of land. I was going to build a storage facility on it. Actually, funny enough, I was really excited about it, and we started the foreclosure process. But the second we served essentially a foreclosure notice, they paid everything, which is still it's still a win, because I'm like, well, I got 16% on my money for the last 3 years.
That's unbelievable.
And I only paid maybe $500 or $1,000 for the attorney to get that foreclosure. And you can do it yourself, but to get the foreclosure process started. So I did start it. I did learn about it, but I haven't actually gotten a property through a foreclosure.
Would they have to pay you back the taxes plus the interest rate plus the foreclosure fees and attorney fees as well too?
On the foreclosure process, no, because you're essentially, they're wiping their hand, they're walking away from the property, so they're not paying anything. So you sunk cost on all of that, sunk costs on your tax liens, sunk costs on your attorneys.
No, but what if they like say, oh, I'm paying all the taxes, and like not walking away from it, like meaning like that person that paid you.
Yep, you're getting all your principal balance on all the taxes. You're getting the interest rate on all that. Attorney fees, we did not ask. I mean, it was like $500 or it was like $700. I think when it came down to it, I don't think we asked for it, and I don't think I don't know if we could. I guess that's a good question. I don't know
Because
that answer.
because I mean, if you get your attorney fees paid and all that, and the foreclosure process paid, then there's really no risk basically at all whatsoever, or not no risk, but less risk. Let me ask it this way. So let's say that that there is a damn. I actually lost my train of thought where I was headed. What are the reasons? Okay, yeah. So, what's the homework process like? Like, so is the goal to bid on properties that don't have any loans? If there is a tax lien and a foreclosure at the same time, is that like a red flag as well too? If there's like a bankruptcy and a tax lien, like, are there certain red flags that you're just like, no, I want to stay away from? And what I was kind of thinking, like, if you buy properties at auction in California, usually like what most investors would do is they would partner up with a title company, and the title company would basically do a preliminary title report and kind of give them a history of everything else on the title report. And then based on that, the investor would know what they're bidding on at auction. For tax liens, like what type of homework is being done on these individual properties? And are there certain red flags that you would stay away from?
It's a good question, and it really depends where someone's at. So in your world in California, taxes, well, it'll vary, but in general, taxes in California are going to be much higher than Arizona. So when I look at dollar amounts of properties that I'm looking at, maybe someone in California might be looking at, or even if you go somewhere like Texas, which is super unique because values are really low and property taxes are extremely high, you have to look at dollar amount stuff. So let's say I'm buying a tax lien. In Arizona, I could buy a $2,500 tax lien on a property that's worth $750,000, $800,000. And so that's a really, in my opinion, really small amount for a massive gain, right? So when I look at that, I'm not partnering up with a title company and getting all of that preliminary
Homework
title
done.
work because it's expensive. One, like to do all that at a large scale, it's going to be challenging. And I'm going to have to, I'm sure I could do it with just from the mortgage side, like I would have those connections, but for the average tax lien investor, they won't have that kind of ability. And they're not doing enough transactions in terms of deed transfers to make it worth it for a title company. So you don't typically look too much at that. Now you can, and I would recommend it on the bigger properties. You 100% should. If you're going to drop 20 grand on a tax lien, yeah, that's probably a good case. But most of the tax lien investing I do is going to range anywhere from 1,500 to $5,000 per lien. And so I'm really just kind of shotgun effect, trying to get as many as possible. And then once I have the tax lien, then I'm doing my research. But it's not worth it up front to do my research on the actual title work, because you're going to do a lot of work to potentially not even get the bid or not even get the lien. So the homework that you really should be doing is the property itself. Now, everyone looks at this and they go, oh, I've got, I could buy this $2,000 tax lien for this $800,000 property. This is great. They buy it. They're like, oh, I got it at a 16% interest rate. I'm crushing it. Everything, it's all going well. And then they don't know the ugly truth that, hey, that property might be totally burnt to the ground. If you've never looked at it, it might be burnt to the ground, or it could be it could be bums living in it. It could be something where it's going to be more of a headache for you once you get the property than what it's worth. And that's unfortunately a good chunk of tax liens. That's a good 20% of tax liens is where that property is going to be probably more of a headache for you than what it's worth. And so really the homework I always I do, and when I tell other people to do is, at least look at it on Google Maps, get a feel for the area, get a feel for the property, and look when the Google Street View was taken. If it was taken in 2021, that's 3 years ago. There's a good chance something happened with the property. Do a drive-by. And so I like to tee up all my tax liens and go drive-by them all. And that's the biggest research I'm doing.
On the website, I think the Bid for Assets, I watched like a little bit of a webinar, and it says something about GIS or like some sort of like platform or system, and it was teaching you how to do due diligence. I haven't watched all of it, but it was teaching you how to do the due diligence on these types of properties. What is, aside from driving by the property, any other like platforms or systems that you would use to do the due diligence process of it?
So GIS is going to be it's county, or it's public records county based, and it'll pull up it'll pull up your map, it'll pull up kind of any recorded deeds that are on it. It gives you a good amount of info, and I would say it's a good place for people. But unless you're in real estate, it's going to be like overflow of information where you're not even know what you're looking at. So I really like the Google Maps strategy. A lot of Google Maps street view these days is within the last 6 to 12 months. And most time that's a pretty good gauge. And you got to know your market, right? Areas where winters are very harsh, you got to be careful. Maybe there's a hole in the roof and there's a bunch of snow and then it melted and the drywall shot or whatever. Or, some places, Tornado Alley, right? You got to keep up with what homes have been completely wrecked, tsunamis, all those natural disasters. I'm in Arizona. We don't have any. So it's pretty easy. It's like, is the structure not burned to the ground? It's probably okay.
Good. So are there situations where you would actually lose the money? Meaning like, I've heard like, let's say a property gets foreclosed on, right? I've heard that like, let's say you foreclose on it or somebody forecloses on it. The first trust deed forecloses on it. Everything else gets wiped out when they foreclose on it, like the second, third, fourth, except for a couple of things. Like maybe like I've heard IRS liens don't get wiped out, so the new buyer has to pay those. Do tax liens still have to get paid out in that case of a foreclosure that is not through a tax lien? And meaning, is there a chance that that lien could get wiped out, or in other words, is there a situation where you could lose the $2,000 or $3,000 basically that you invested in this tax lien? And if so, what would that be?
It's a good question. I haven't looked specifically into that because actually all of the liens I've won. Because once I win the lien, I then start doing a lot more due diligence on it, and I mark whether I want to keep the property or if I don't, right? And so a lot of that, almost every single property I've looked at where I've won a tax lien, there have been very few liens on the property, and so I know that even if this home was burnt to the ground, there's the land itself and the cost to remove maybe debris is still worth it. But I do think that if there were mortgages on the property, you're another lien on title. So if you're the third lien, fourth lien, I do think there's a potential
you could get wiped out basically at that point. So I think that would be like an important question for some of the viewers, because then at that point, the due diligence process would be a little bit different. Like if you know that they're in a foreclosure process, that would probably be a lien that you'd want to stay away from. If you know that there's like a bankruptcy, probably something you want to stay away from potentially.
Right. But you have to be careful because a lot of those, if they do have a first lien, second lien, third lien, at least in the mortgage world, most of the time when their loan to value is that high or they don't own as much, they don't have much equity, most mortgage providers, they're requiring them to escrow, or they're making sure because they don't want this to happen, right? They want taxes to be paid. And so it's very rare in that case. It can happen, right? But every time a lien's coming on, those taxes are always being brought up and either having to be paid or having to be taken care of.
So basically what he just said, and it's very keen, I didn't even think about this, is that most of the time for people that have mortgages, the escrow and the impounds are included in that mortgage statement. So most of the properties that are going to the tax liens don't actually have that because the lender's not requiring them, which in other words, could mean that they likely have very little debt or obligation on it, or they're just a more sophisticated type of investor, but most of the time it's going to be included, which is actually a really good tip.
It's huge. I think about roughly 70% of properties are owned free and clear that are on tax liens.
What about how do you find out? You said that if you bid it on the first year and then somebody's bidding on it for the second year, you said subsequent tax lien. Is that on the website, or how do you find that out?
It is specifically noted on every single bid. Right next to it, there's a letter that says if it's a subsequent, or there's a couple of other notations that'll have on there. I can't remember specifically. One of them is like an O. I can't remember what the O stands for, but I stay away from a lot of those just because that's not my strategy. But you will know. I mean, it is literally right there, right where you put in your bid.
So if there's a notation on there, look to see what that means, basically, in other words.
Way more due diligence on those properties.
Got it. Now, I think in California, and I saw this, and I Googled it, it said that the whenever it goes into a tax auction, the 3-year waiting period has already been done. So I'm not sure if in California it's only one bid for the entire amount, or if it's still the 3 different ones. But what I heard is that you don't have to wait the 3 year, and that once you actually do it, and once you actually bid on it, you're technically the owner of the property. That's what I Googled. I don't know if that's true. Do you think that could potentially be true?
I think that's the tax deed sale.
Tax deed.
So you could bid specifically on tax deeds, which is that it's a property that's already at that foreclosure process, and you're essentially buying all of whoever's got the tax liens or whatever the cost is, knowing that I can start the foreclosure process right now.
That's awesome.
And those are going to be a little more expensive. Those are going to require a lot more due diligence on.
Got it. Is there anything else that you think would be important for our viewers to know if they're considering potentially like either a tax lien strategy?
The biggest mistake everyone makes when they get into tax liens is they see a bunch of super cheap tax liens. They see them for $50, $40, $80, and they go, I'm going to go buy 100 of these because they're super cheap and I'm shotgun strategy. What most people don't realize is that those tax liens are more often than not on land that is undeveloped. It's unbuildable, undevelopable. And the people who own them buy them and realize, I can't do anything with this land. It's so cheap. I'm going to walk away. I'm going to walk away with my $3,000 investment. And so you don't want to be stuck with that because now you're going to have that same issue. So most of the time, don't go for the super cheap tax liens because they're typically junk, and there's a reason why there's a lot of them. And then another thing that people make mistakes on is that there is a transaction fee with every county on every deed or every lien you buy. And most counties is $10 or $15. It's really small, but you have to think about that. And that's why I have a whole calculation on how I bid. Because if you're buying a tax lien, and let's say you buy a cheap one, a $500 tax lien, $700 tax lien, and you go, I'm going to bid at 6%. Well, you have to remember it's 6% on the year. So you are getting, 1/12 of 6% every month. So if you buy a tax lien and you pay a $10, $15 transaction fee, whatever it is, and that property owner goes, oh, shoot, I just forgot to pay my taxes. I see I have a tax lien. Let me pay it off right now. They paid off essentially a month after you bought it. You lost money because you paid $10 to $15 on the transaction, and you maybe got 1 month of interest based on whatever interest rate that you had. And so it's really only the case when you're bidding on cheaper tax liens, but that's what most people do. They think, I want to get into this. I have $5,000. I'm going to go buy a bunch of smaller liens. And then they end up losing money because of all these fixed costs and what they don't understand about it. So those are the biggest takeaways if you're going to start doing it.
What does the calculation look like that you have? Like, meaning, like, can you walk us through that?
Yeah, it's probably easier. My video breaks it down visually, but I have this like insane spreadsheet where I basically plug in the price point and the interest rate, and it spits out what my
monthly interest.
Essentially what my monthly interest is and what my minimum break even would be. Would it be month 3, month 4, month 5, month 6, whatever it is? Anything over, 4 to 5,000 on a tax lien, it almost is always a break even after the first month. But it's meant for those cheaper tax liens where you really have to be careful. So
it keeps you from basically
breaks out your monthly.
And then what do you look for? Do you look for like a 1 month break even, a 2 month, a 3 month, a 4 month?
Depends on the property. I'm willing to be I want to be break even 1 month. I don't want to lose any money. We invest to make money. I don't want to lose money. So I look pretty much 1 month. Whatever the 1 month is, that's the lowest I'll bid on it, and I don't go lower than that. The only times that I'll think about going lower is if it is a property that I really, really want, and I am okay with losing money, maybe even for the first year, if there's a really good potential that I can foreclose and get the property. And in 2021 tax lien auctions, even in 2020, that was very much the case. I didn't win very many tax liens at all because a lot of investors had that mentality of everyone had a lot of money in that time. Cash flow was strong, and people were bidding negative, essentially at losses in hopes that they can get the property. So,
got it. That makes a lot of sense. You talked about strategy as well too. So obviously you talked about the calculation. What other strategies would you say that you implement, and what other strategies do you see other investors implement as well too?
I see a lot of bigger investors buy in batches, and you can actually bid in batches. You can, say, hey, I'll take all 500 of these tax liens at a 10% rate, and whatever hits in that 500 batch at 10%, they stick with. And I do know a lot of investors who do that because maybe they run funds, they have to guarantee a certain amount of return for their clients or whatever. And they go, hey, anything that's going to hit above this interest rate, we'll take. So I would say, when it comes to strategies, you want to think about your overall outlook. There's some investors who don't want to foreclose on a property at all. and they just want that. They want that interest return. And so they look at properties that are in really good condition. They've got a lot of meat on the bones. The tax liens are expensive, and they're typically from pretty established companies or neighborhoods. And so they know that there's nothing wrong with the property. It's probably someone old or someone who just forgot to make their taxes, and they're likely going to pay this off in 4 to 6 months. And that's a strategy, because then you go, okay, if they paid off in 4 to 6 months and I'm bidding at, 13% on a big tax lien, I'm going to get 6% return on my money in that short of a time period, right? And that's their strategy. Then I talk to other people whose strategy is purely on the foreclosure process, and they're essentially trying to do acquisitions. They're doing cheap acquisitions to where they are okay with losing money for 3 years if it means that they're going to get a 90% return on their money when they acquire the property. And so once you average that out over a lot of liens, a lot of properties, you're going to get maybe a 30-40% return because there's a ton of sunk costs. So you really have to look long-term with it and think, what is your specific strategy for making money? And just know that buying one tax lien with a random interest rate bid is probably, maybe you get lucky, but you're probably not going to make a lot of money with that.
Got it. Okay, cool. Got it. Well, I've enjoyed this conversation a lot. The next book on my kitchen table is a tax lien, tax deed book. I'm excited about this just because I don't know very much about it, but I think that there's opportunity there. Even like worst case scenario, if you're earning 10% on your money and it's somewhat safe to earn that 10% on your money, that's a lot better than a lot of other places to invest in. If people wanted to get in touch with you or maybe like do mortgages with you in Arizona, what would be the best way for them to do that?
Well, I would say two things. One, I'm super close to 100,000 subscribers on YouTube on a newer channel that I made, and I haven't uploaded in forever. So go subscribe there. It's just my name, Shawn Malkou. But in terms of mortgages or anything else real estate related, company is just x2mortgage.com. We're pretty easy to get a hold of. Our number's up there. All of our numbers at the company are all on there as well. So super easy to get a hold of. But yeah, hopefully I can push that 100K on YouTube.
I love it, man. Well, I did want to say thank you for taking the time. This was like extremely helpful. Sorry I couldn't contribute a little bit more, but I think that I learned a lot. So I appreciate your time. For our viewers out there, if you're new to the channel, make sure to hit that subscribe button. If you feel that this would help somebody, make sure to hit that share button. Thanks again, Shawn. And to our viewers, until next time.